Hi there, I'm Paul Waldie, and I'm joined by Brian Milner, and we are talking about the market mayhem today. Brian, we've seen the Dow Jones fall 1,000 points this morning before coming back. The TSX was down really sharply. What's going on here?
Well, obviously there's enormous tumult in the market and a lot of uncertainty, but I think what we saw this morning really reminds me more of the flash crash than any huge downturn, any sudden move that's going to stay down for a long time. I don't think we're looking at a huge bear market issue here. This really is a technical trading issue. A lot of this is people getting rid of ETFs, and that's been triggered by fear, but once that happens, it just has a momentum all its own, and it goes around the world. And we saw, markets in France and Germany today are at their lowest level since 2011. Biggest losses, one-day losses since 2011. Everybody else is down like it's 2008 again, but it's not.
All right, now that addresses some of the extremes, but the markets have been on a downturn really since the Chinese yuan was devalued or was free-floated, and there's been a lot of this stemming from concerns about China and in China. What about all that? There's
no question that people are sort of on tenterhooks about what China's up to and how slow its economy is going to get. The issue really is, can China manage its way through these economic problems, through the bubble economy issues that they've had, and emerge at the other end with something intact? And people just don't know. So that's what's happened in the emerging markets. That's spread to the developed markets. There are a lot of people very nervous about this former growth engine, which rescued the world from previous recessions. What's going to happen now if China collapses? Oh my God, the rest of the world is in big trouble. I think that's overstated. I think people don't realize that other markets are much more durable than that. I think the developed markets are not doing that badly. Developed economies are in a lot better shape than they were just a few years ago. And the China thing, I think people have known that there's critical weakness there for a long time.
Real concerns, though, coming out of China in terms of the numbers they report. And I think I'm reading more concerns about that lately than I have in a long, long time, that people just aren't trusting what the government's saying. When I say people, I mean outsiders, investors. We saw the government rather suddenly let its currency float, which meant it dropped, and there was these ham-fisted ways of dealing with the stock market and the currency. Growing kind of concern that maybe things are a lot worse in China than the government is saying.
Well, I think that's right, and I think the fact is people should never have taken Chinese numbers at face value over the years. It's a political issue in China, and I think the politicians are panicking. We've always said, oh, but the Chinese are run by real technocrats. They know what they're doing. Well, actually, they don't. They don't know how to fix this, and we saw that when they went into the market. Suddenly things started collapsing, so what did? They ordered companies to buy more shares. They told executives that if they sold their shares, they'd be arrested. I mean, these are things that are not conducive to healthy market trading, and that's the impact we're seeing. China, though, is not the entire world market, and China does have a huge amount of reserves. We're talking about $3 trillion that they can throw at problems if they still need to. And the fact that we're seeing these market fears spreading around the world, I think that's not going to be long-lived.
All right, Brian, we've got to leave it there, but all eyes are certainly on the markets these days.
They certainly are.